What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look here at Alibaba Group Holding, ticker symbol BABA, on the New York Stock Exchange. Now, this is a company that I know a lot of people are familiar with. This is basically the Chinese Amazon, and some people feel that it's been beaten up too much and you're buying it at a discount. Other people feel that you shouldn't touch it with a 10-foot pole, and they wouldn't buy it if you gave them free money to purchase it. But first of all, as you can see, we pull up like a 5-year chart here, you can see the company was rising and got up to over $300 a share, and basically since the end of 2020 has basically been in free fall and is now trading at around 90 and change. And again, a lot of people feel it is at a discount. A lot of people feel it is going much, much lower. We switch over here to stock charts. And again, I just want to show, we're looking at the weekly here, and you can see this massive pullback here and this massive sell-off. Looks like it's potentially gaining a little bit of support here, bouncing off this level. But, again, you got the MACD. Looks like it could potentially cross and go lower here from this level. Again, this is the weekly, and we have an RSI here of about 41.5, which is kind of oversold. But at the same time, it is in a downtrend, so it will potentially continue to go lower. Here on the daily, you have a flattened MACD, and again, it could potentially break really in either direction with an RSI here of sub 40 on the daily. But if we switch over here to TradingView, is a 1-month chart we're looking at here, and you can see that we kind of potentially have, looks like a double bottom here, kind of found support off this fib here of about 88.61. And in the short term, you can say that you could potentially see a bounce back up to about 100 and change. We switch back here to stock charts here, looking at the daily, and you see a 50-day moving average of about 104 and change, and the 200-day moving average of, we'll call it 112. So in the short term, you could see a bounce back up to 104. However, recently, as it broke above the 50-day, it did have big rejections and big sell-offs. And again here, broke above the 50-day and big sell-offs, rejected, broke through here. I believe this was on earnings, and retraced all the way back up to 100, 120 and change, we'll call it, back up to around the 200-day moving average, and then has rejected, tried to bounce and stay above this 50-day, and obviously pulled back and has been taking some selling pressure here recently. But if we look at the numbers overall, first of all, PE of 50 could potentially be viewed as overvalued. You have a market cap here of about $244 billion. And if you look over here annually, that looks phenomenal. Year over year, just consistent, steady growth. Starting out at, look at this, $37 billion in 2017, rising up to 56.73, over 100, now at $133 billion for the year of 2021. Definitely nothing to sneeze at. However, there's probably one metric that definitely caught your attention, and it is the profit margin, dropping from a high of about 29% down to 7% last year. And if we switch over here quarterly, a lot of people are saying that revenue has potentially plateaued, and you can see here a touch below 32 billion, 31 billion, excellent breakout quarter here of a touch below 38 billion, and then back to 32 billion and back to 31 billion. And also you can see the step down here of the profit margin, even going negative here in Q4, but then bouncing back up to about 11% here recently in Q1 of 2022. So there's a lot of ways to look at this situation. However, overall, we'll check out the numbers here, but I do want to say a few things about China as a whole. As you can see, the PE has been rising up to almost 50 here. The price to sales ratio is an indicator that a lot of people look at to see if a company is undervalued, and obviously as the price has been decreasing, then the price to sales ratio is also going to begin to look more attractive. And you can see here it was in low double digits and pulled back to high single digits and then dropped to about 2.25, and now it's at 1.8. So looking at some of these metrics, you could say it is undervalued. However, again here you got a price to book, see, pulled back to 1.65. That technically is undervalued. But a lot of analysts out there are basically labeling this as a value trap, telling you not to get involved here. And one of the reasons why here are these profitability ratios. All right, if we highlight most of these numbers here, look at the return on assets here, right? Kind of maintain that double-digit, low teens, and then took a massive hit sub 4 and is now sub 2 on the return on assets. The return on equity, very similar situation, was maintaining, this is, what year was this? 2015. So I think that's kind of around the time that the company got listed, right? So we'll say that, they were a little overinflated when they IPO'd, we can call it. And then they pulled back to the high teens, broke above the 20 range, back to high teens, and now pulled back recently in the last few years, single digits, and now 3.33%, right? So a lot of these percentages are being viewed as massive red flags by a lot of analysts, which is why a lot of them are cutting their price targets and also telling their clients not to be a buyer and not to be bullish here on BABA. Return on invested capital here, again, high teens, mid-teens, seems healthy, drops to sub 6, drops to sub 3. Gross margin percentage has plateaued, you can say, or basically found support at around the 35% range here in the last year or two. Operating margins have flattened out in the last 2 or 3 years, maintaining 11 to 12%. EBITDA margin, earnings before interest, taxes, depreciation, amortization, has pulled back from the highs of high 30s here and even mid to high 20s, and now we're in mid-teens, hanging around. We'll call it 17% for now, but it's really any steadily decreases like this that we're seeing year over year, especially recently in the last couple of years. These are red flags for analysts. These are red flags for investors. Net margin percentage, I mean, look at these numbers, very healthy, north of 20% in the mid to high 20s, pulls back but maintains that 20%, and then boom, last year you're seeing 7.25%, now regained the double digits, it's sitting at 11%. But again, I just wanted to look at a few of those numbers and bring it to your attention here, especially, again, the price to sales, the price to book does make this look very attractive. However, return on assets, return on equity, return on invested cap, I mean, everything has basically been taking hits here at BABA, and that's why analysts and investors alike aren't really speaking positively about Alibaba Group, right? And you have potential delist rumors of Chinese companies, right? Talking about China as a whole, you have potential delist rumors. You have the China real estate bubble. Apparently, there's over 12% vacancy rate now, and there's like 50 million flats that are vacant right now that aren't occupied, and the buyers are refusing to pay their mortgages because the projects aren't finished. And basically, it's just, excuse my language, it's basically a shit show happening over there right now. And a lot of people were saying they basically just kept building and building and building just to pump up their GDP in the short term. And now you're seeing it take effect potentially in the long term, running into a roadblock, if you will, with a lot of these ADR Chinese listed companies. You have energy costs rising, which of course really doesn't help anybody anywhere you are in the world, whatever it is that you're doing. And also I heard that China doesn't want to give American regulators full access to this Chinese financial data, which I don't know about you, but if I was an American regulator and you tell me I can't look at the numbers, I would definitely view that as a red flag. But again, overall operating margins have decreased here. Adjusted EBITDA is lower. Net income is down. Revenue has flatlined. And a lot of people are saying that even though BABA has been buying back shares, they've also been laying off workers. And a lot of people feel that that's just a short-term band-aid to potentially improve their profitability. But I will leave on a positive note, because however dark the cloud, there is always a silver lining. And the one thing I did find here is that the cloud segment is up 10% year over year. So it seems like, it's a decent company, but at the same time, there's appearing to be a lot of outside factors that are just negatively impacting the stock price of Alibaba. So again, I know a lot of the numbers do make it look attractive. Again, in the short term, I know short term we usually go with technical analysis over fundamental analysis, and you could say that it has found its support here, bouncing off the fib here of around 88.5. with a potential double bottom here rising back up in the short term. So if you do want to take a shot and roll the dice with a short-term entry here at these levels, and that is entirely your own prerogative. You're the one that's going to have to live with it at the end of the day, regardless of whether the stock goes up, down, or sideways. But if you do happen to go long here at these levels, I do wish you the best of luck, and I do hope it works out for you. I basically just made this video to just bring a couple of things to people's attentions, because I know that a lot of investors out there have been looking at BABA, and they're wondering why it was 300 and now it's sub 100. Should I jump in now, or is it going to go lower? And I just wanted to take a look at a few of the numbers. Excuse me. Take a look at a few of the numbers, and of course look at the surroundings of where the company is actually located. Which, as I laid out a couple of negatives here, it's really not looking too hot right now. But again, this is just my opinion, throwing my 2 cents. You might think it's going to bounce now back up to 150, 200, or you might think it might continue to drop down and hit new lows here. We have a 52-week low of 73.28, and in my opinion, again, short term, next couple of weeks, it could bounce up and see some growth here back up to 100 and change. But in the long term, I do think they're going to continue to beat it up. I really do. And I think they're going to pull it back down to, in that 70 range. And if it does hit, mid to high 60s or low 70s, then we could potentially talk about stepping in at those levels, being even more attractive, and potentially, trying to time that bottom there. But as of right now, again, I hate to say mixed bag. I hate to not have high conviction of whether it's a buy or whether it's a sell, but honestly, right now, I wouldn't touch BABA. That's just my opinion, but I'll leave it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. I appreciate it. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, helps me get a few more eyes here on the videos. And of course, if you appreciate the content I'm putting out, please hit the subscribe button. Obviously, it means a lot to me, you guys showing me support here in the community. But like I always say, I know moving forward, markets are rocky, markets are volatile, markets are uncertain. So I wish everyone success. I hope everyone makes a couple of dollars. I want you all to stay sharp. And thanks for stopping by. I hope you have a good day.